How's it guys, welcome back to the channel, and in module 5 we'll be going over market structure and identifying trends. So what you'll learn in this module, you'll learn market structure, identifying trends, statistics, how to trade trending markets, how to draw trend lines, and at the end I'll go over a few examples. So one of the most important skills of the trader is the ability to read the market structure and using price action to predict where price may move depending on certain factors. And in the next slide I'll go over what you should be thinking when looking at a chart. So when you open a chart, you should be asking, what are the crowds doing? Who is in control of the market? Is it the buyers? Is it the sellers? What is the right time and place to enter and exit the market? I'll be going over a few of these in the next couple of slides. So identifying trending markets are simple, as it is a repeating pattern of higher highs and higher lows in an uptrend, and in lower lows and lower highs in a downtrend. So I'm going to go through an example of an uptrend and a downtrend and show you why they differ. So you can see in this example we have one high and then 4 consecutive higher highs after that, whereas at the bottom we have a low and 3 consecutive higher lows. So this is the clear uptrend, as we are forming an ascending higher high and a higher low pattern. Whereas when you look at a downtrend, so downtrend is essentially the opposite of an uptrend. So in the uptrend we had our higher highs and higher lows, whereas a downtrend you can see that we have our lower high and our lower lows. So in order for it to be a downtrend, you have to have at least 3 consecutive lower highs and lower lows. So you can see that we have 4 on the top and 5 at the bottom. So you can see that this is the valid downtrend. So you have to have these levels in order for you to confirm where the trend is going. I'm going to go over a few stats just to help you guys understand how often these occur and what time frames you should be looking at. So about 30% of the time it will occur with these higher highs and higher lows and trends in general. So you have to know when to take advantage of them. So when looking at a trend and drawing your lines, which I'll explain in the next couple of slides, you have to make sure you draw these on higher time frames for it to be valid. If these are drawn on smaller time frames, they could be invalidated, as there's a lot more noise, a lot more price action failures on smaller time frame. But when you look at higher time frames like the 4-hour, the daily or the weekly time frame, you'll get more confirmation of where price is going and what it is actually doing. So when looking at trading an uptrending market, you have to make sure that it's a bullish market and you're only looking for buying opportunities. Because if you trade with the trend, you'll be way more successful than trading against the trend, looking for those reversals. So when looking at an uptrend, when I'll go through now, you have to know when the right time is to place a trade. So trading markets can be characterized into 2 important moves. The first one is called the impulsive move, and the second one is called the retracement move. So looking at this on the right, you can see that we're in an uptrend. We're forming these higher highs and these higher lows. So you can see the first move is called the impulsive move, like I said, and after that you have the retracement. So in order for you to know where to buy, you have to make sure first, is it an uptrend? Yes. Now you know that we can buy on the retracement. So a good opportunity to buy would be at this level here where my mouse is. This is where you would try go long, as you're waiting for that pullback, the retracement. And whenever you get a retracement like this, you know you're in an uptrend, it's a good time to go in within this area. So you don't want to be buying within the impulsive move, you want to be buying on the retracement. That's very important to understand that. So now we're going to look at a downtrend. So when looking at the right here, we have an impulsive move to the downside, then we have the retracement, another impulsive, retracement, impulsive, retracement, and then another impulsive. So a good time to enter the market would be at the top of the retracement, so the start of the impulsive move. So you would want to get at the top here so you can catch that downward move. So you first have to identify, are we forming those lower lows and lower highs? And if that's yes, perfect, then we are valid to get at the start of the impulsive move. So these areas at the top here, so when the retracement ends, that would be a good time to get in. So now I'm going to go over how to draw trend lines. So when drawing trend lines, you have to make sure that there's at least 3 swing points that connects with each other, and the levels must be clear. You can't force a trend line. You have to make sure that it's a valid trend line for it to occur, and make sure when you're drawing these trend lines, it has to be on higher time frames, as like I said earlier, drawing trend lines and looking at market structure and everything on smaller time frames, yes, it can be valid, but it won't be as predictable as looking at higher time frames would be. So this is an uptrend. So you can see here we have a touch over here on the bottom, another touch here, another touch here, another touch here. So you can see this is a valid trend line. We have more than 3 touches. So this, you can see we're in an uptrend, so we're getting those retracements. So a good time to buy would be at the touch of this trend line, whereas also over here it's touch the trend line, a good time to buy. So you have to make sure that there has to be at least 3 points of touches before you draw these trend lines, as it won't be valid, and this is on a higher time frame. So now looking at a downtrend, same goes with the downtrend. You have 1, 2, 3, 4, 5 touches over here. So you can see that we have that impulsive move down, we have that retracement. So like I said, we want to get in at the start of the impulsive. So a good time to go short would be at the top of this line here, and you can see we have a valid trend line that we've drawn. So it's a good time to get in. And also when looking at this, you have to make sure that we have those 3 touches. So a good time to enter would be down here, because if you only had to draw the trend line after the 3rd touch, then you would know that this is a valid trend line and we're in a downtrend. Okay, now I'm going to go over my Bitcoin charts and show you guys how I draw my lines, and you can also do the same. So I suggest you open up your chart so we can get straight into it. Yeah, you can see here I've already got my lines in, but I'll redraw them so you can understand where you draw these lines. So first of all, you have to identify, what are we in? Are we forming higher highs or lower lows? You have to understand, what are we in? So you can see over here, so we form this high here, and then this is a low. Form this lower high, lower low, lower high, lower low. So you can see we are in this valid downtrend. So in order to draw trend lines onto this weekly time frame, remember 1 week is 1 candle, so just remember that. So you grab your tool, which is the second one down, you draw it from I do it from the candle closes. You can see that we have a valid bottom trend here. You see here we touched it over here twice, 3 times, and then over a couple of weeks we were trading in this range, and then at the moment we are currently trading in that range. So you can see that's a valid trend line. We've got more than 3 touches, so we've ticked that off. And then looking at the top side, you can see that it is a valid trend line, as when looking at it, each week counts as a touch. So over here we got 1 touch here, and then on the next week we have another one, and then over here, so we have 3 touches, right? So that's also a valid upside trend. So when looking at this, you can see, okay, we're in this downtrend. We are forming lower lows and lower highs. So the next logical move for us to do would create another higher high, right? I mean a lower high. So in order for us to do that, we would have to retrace a bit. So you can see we're in this impulsive move to the downside. So we needed a bit of a retracement to the upside to form that lower high. So when looking at this, you can see that we are ranging in this zone. So our next step would be to create this lower high and then move down further. So that's kind of how you draw it on a weekly. Then looking at a daily, you can see it will become a bit more cleaner. So looking at this here now, so we're on the daily chart. You can see how many touches we've got from this trend line. You can see at the top there we've hit the top a few days, and then over here, so we have that valid trend line, and also to the bottom you can see how many times it's touched these lines. So looking at it on a weekly just identifying the trend. So we are in this downtrend. We've been in this downtrend for the whole year, even longer. So we are in a downtrend, and when trading, you'll be looking for shorts, right, on the retracement, and then you catch the next impulsive move to the downside. But a lot of traders also, you can counter trade it. That's more professional, where you trade against the trend, but I would suggest trading it with the trend. So our next move would be to come up, create a new lower high, and then move down further. That would be the next move. So you can see we are on this valid downward trend. Like I said here, we are forming this type of pattern. So that's kind of how you draw it. And then obviously, if you want to look at a lower time frame charting, we can go on smaller time scales. So I'm on the 4 hour now at the moment, and in order for you to do that, you just need to apply the same rules. So at the moment, we're not, if you look at it in terms of where we are now, we are ranging. So this is called a ranging market. You can see that, if I had to draw this, you can see that we are ranging from the top here to the bottom. So this is what you call a ranging market, where you range between an upper price level and a lower price level. So in order for us to get that lower high, we need to break this level here and then form a little retracement up to about 18k, around about, and then we can see that next leg down. But if we don't get that, because we are on a downtrend, so it can go the other way, we can break this level here at around 15,500 and move more down to the downside. So that's kind of how you draw the trend lines. And then in my next session, I'll be going over risk management, and I'll speak about what you need to do in order to risk per trade, and looking at higher time frames and how you go about when actually doing a trade. So, and then at my last module, I'll be going over, it will be a trading session where I'll go over charting and how I'll break it down from a week to a day to a 4 hour to a 1 hour, and then carry on going down, and then you guys can understand how I draw my lines. But I hope that made sense, because it's quite important to know this. You can see that we are in this valid downtrend. So yeah, see you guys on the next video.